sound. In today's meeting, we are going to have a detailed conversation about a shocking finding that has the potential to change the way that we think about money for the rest of our lives. The cryptocurrency sector is being rocked to its very base by this fresh and momentous revelation, which is also sending shockwaves throughout the industry. A quant analyst at Goldman Sachs has revealed a confidential trading model that forecasts that the price of XRP will eventually reach $10,000. The model is based on mathematical calculations. It is important to note that this particular model is not simply a theory, but it is also a study that has been well explored and is driven by data. This is not only a hunch or a lot of hoopla, rather it is a cold, hard estimate that is based on financial mathematics, supply and demand analysis, and severe statistical techniques. This estimate is based on the assumptions that have been made. Consequently, the model is a powerful and accurate instrument for making predictions since it is based on data gathered from the real world, notably from institutional trade. This makes the model an effective tool for making forecasts. The consequences of this revelation are enormous for persons who own XRP, who invest in it, and who keep track of the development of digital currencies over the course of time. In addition to the possibility that it will bring about a new era of opportunities to generate money, it is also feasible that it could bring about gains that have never been seen before. Sound in the trading model that serves as the foundation for this research is a true masterpiece in the field of quantitative finance. Regarding this particular matter, it is important to take it into mind. For the purpose of arriving at this result, a group of highly skilled financial engineers worked together over the course of several years and made use of complex mathematical models. Not only does this approach focus on studying how prices vary on the surface, but it also takes into account other factors. The mechanisms that are responsible for the value of the XRP ecosystem are investigated in great detail throughout this essay. At its core, the concept is a brilliant mix of the standard total amount of 100 billion tokens that XRP possesses and the rate at which tokens are moving across its ledger in real time. This combination is the foundation of the notion. In addition to the components that are currently there, this presents institutional demand curves as an additional component. Only large financial actors are typically allowed to view these complex data sets. The general public is not permitted to do so. These data sets are not available to the general public. Through the incorporation of these components, the model not only demonstrates the limited availability of XRP, but also the movement of the cryptocurrency within the market. In the context of this debate, the term velocity refers to the frequency with which XRP tokens are delivered or traded during a certain period of time. This indicator demonstrates the utility of the money in the real world, the rate at which it is being accepted, and the level of trust that institutions have formed in the network. All of these things are demonstrated by the currency. It is common for there to be a significant number of transactions taking place when there is a quick pace present. This can result in a rise in both the demand for the product and the price of the product. There is still more to come in terms of the model at this stage. The intricate simulations that it runs take into account a wide range of parameters, such as the amount of trading, the premiums on liquidity, and the factors that contribute to market friction. Each of these aspects has a substantial influence on the manner in which prices are established. A price of $10,000 per XRP is consistently determined by the MOD. This pricing is a compromise between the two requirements since it takes into account both the necessity for transactions and the requirement for institutions to accumulate XRP. The point at which the forces of supply and demand are steady is known as the equilibrium point. This point is reached when the number of institutions that will be participating and the number of transactions that will take place in the real world are taken into consideration. A sophisticated technique that is driven by data, it offers investors a convincing picture of how much XRP might be worth in the future. This strategy is driven by data. What comes to mind when you think about this strategy is presumably that of a giant digital whiteboard that is covered in mathematical riddles, code fragments, and live data displays. This is the image that comes to mind. The idea that worth is not primarily determined by the quantity of resources that are available is the central tenet of this research. It is impossible to exaggerate the significance of speed and the desire that institutions have about it. Due to the fact that there is a limited amount of tokens that are available, it is unavoidable that the price will go higher as the demand for tokens continues to rise. The importance of this fact cannot be overstated, particularly for large financial institutions that are in the process of preparing to make use of digital assets. The primary reason for the worth of $10,000 is that this explanation is responsible for it. One coin that employs this kind of tight quantitative method is not XRP. Other cryptocurrencies do as well. Those who are interested in cryptocurrencies might be familiar with stock-to-flow models, which are a type of forecasting tool that utilizes the rate of issuance and scarcity to estimate future prices. These models gained popularity among Bitcoin professionals. Future prices can be predicted with the use of these models. Due to the fact that it integrates actual institutional flow data and velocity measurements, the model that was built by Goldman Sachs is unprecedented in its scope of application. When it comes to pricing estimations, retail consumers are provided with an additional level of precision and reliability that they do not always possess. Retail purchasers are provided with this information by doing so. This model provides a more accurate portrayal of the actual market potential of XRP since it takes into account the actual buy-side interest. This interest comes from banks, hedge funds, and liquidity providers. Sound. Furthermore, the findings of this analysis indicate that large financial institutions have undergone a substantial shift in their viewpoints toward XRP. XRP was regarded as a specialist digital asset for a number of years, with its principal utility being in international transactions. Since then, it has gained widespread acceptance. Now, Goldman Sachs and other big financial organizations are touting XRP as a fundamental financial instrument that is capable of managing movements of trillions of dollars with a speed and efficiency that is unmatched by any other financial product. The model that was released reveals that the top bankers are not only aware of the potential of XRP, but they are also actively working out how much it will cost in the future to plan their actions. This is demonstrated by the fact that they are actively participating in the process. Sound recording as in. On the other hand, another thing that stands out is the human cost that has been caused by this leak. The quant analyst who had provided this model was reportedly fired from their job inside the business not long after the news was revealed, according to the reports that have been made public. The fact that this is accurate is evidence that the trade algorithms that are utilized by huge banks are extremely sensitive and confidential. Demonstrates the owners of XRP are about to enter a new era in which they will be subject to both chance and responsibility when it comes to their investments. If you want to reach your target of $10,000, it will not be completed quickly. Because of the shifting liquidity of the market and the growing demand from institutions, it will take some time and patience to accomplish this. As a result of the fact that the market is heading in the direction of this value that is supported by scientific facts, it is recommended that you hold, gradually build up, and continue to be alert. Additionally, individual buyers should be aware of the functioning of the market and the risk of experiencing short-term volatility when the equilibrium price searches for its natural location. This is something that they should keep in mind. Furthermore, this model signifies a change in the narrative that has been provided about XRP. We no longer have to rely on speculative hype or projections that are vague. This is no longer essential. Instead, we have a genuine pricing target that is based on mathematics and is compatible with the purpose of XRP, which is to be a digital asset that is developed for the purpose of facilitating financial transactions that are both scalable and quick. The $10,000 barrier is a point of reference for both investors and businesses that are in the process of establishing themselves. This illustrates that XRP has developed from a cryptocurrency that was utilized for the purpose of experimentation to a vital component of digital banking all around the world. Sound in the trading model that was taken from Goldman Sachs was a key event for the Bitcoin business. This is not the least of the events that occurred. Between the strict statistics that are utilized on Wall Street and the chance for autonomy that blockchain technology gives, there is a relationship that exists between the two. One example of how powerful it can be to merge data science, financial theory, and adoption trends in the real world is exhibited by the program that led to XRP values hitting $10,000. This program highlights how strong it can be to incorporate these elements. Those individuals who have faith in the future of XRP now have a concrete roadmap to follow, and as a result of this model, they have even more faith that the best is yet to come. Please keep an eye out for the upcoming exclusive interview as well as the publication of the detailed model. When it comes to the operation of the market and the value of XRP, these are going to supply you with knowledge that is exceptional in its own right. We want you to be a part of this